What's up, everybody? Welcome back. Happy Wednesday. Hope everyone's having a good day. I got a lot to cover in today's episode, including we finally found out what happened to part of Celsius's missing customer funds, and it's pretty surprising. Plus, the SEC investigates and sues a 2017 ICO. They're going way back with these lawsuits. And more layoffs at two big crypto entities. So don't forget to like the subscribe button. Follow me on Twitter at bencryptoshow. Let's begin. Price action, nothing much to discuss. 23,600, been at 24,000 repeatedly. Again, as I mentioned before, when prices stay flat like this, they have a tendency to break either sharply up or down, 50% either direction. So right when you get comfortable and think it's found a floor, it's not always like that. The last couple times prices have gone down. 30,000 a couple months back in June, then they broke sharply down. 2018, BTC was at 6,500 for several months. People got comfortable, prices broke sharply down. But in September, altcoin teams in the market in general really has a lot of activity, picks up, more partnership announcements, so that could be indicative of prices breaking sharply up. It could go either way. Just don't get comfortable, expect volatility at some point in the future. Moving on. Severe allegations on Celsius CEO as the company considers financing proposal. Excuse me. So this is a cover story for the day. So as we all know, with Celsius, there's between a $1 billion and $3 billion hole on their balance sheet, meaning customers' funds, just several $billion disappeared, and we haven't quite found out what's going on. With 3 Arrows Capital, it was a little more obvious. There was the supercycle theory that their founders had, where they said BTC was not going to go down more than 80% again, even though it had done that twice. And then when BTC went down from 30,000 to 21,000, that was the 80% decrease, and they had bet against that. So they just had sort of bad, risky bets trading on the direction of BTC in the market as a whole. With Celsius, it's a little bit different. Let's go down there. As per unidentified sources, Mashinsky was worried about the interest rate hikes by the Fed in January 2022. As a result, he reportedly sold users Bitcoins worth millions of dollars only to buy them back the next day at a higher price, and he lost $50 million on that trade. So as I've covered many times on my show, every single time the Fed raises interest rates, everyone thinks it's going to lower prices, but every single time prices have gone up almost immediately afterwards. It's just like a wave of relief flashes over the markets. People are relieved. They don't have to worry about those announcements for another couple months, and prices go up. So Mashinsky apparently is sort of a kind of a gambling addict personality, it seems. In crypto, that's risky, obviously, because you have access to the customer funds. Obviously, if you're trading them in ways you're not supposed to, like he was doing, you can't do that, but it is just much riskier with his gambling personality type when the funds are right there, and he apparently is not a very good trader either. This trade single-handedly lost $50 million. I mean, that's a lot in just one trade, losing $50 million. That's tough to do. That's really tough to do. Yeah, prices are volatile. They're not that volatile. Moving on. Ethereum survey of the day. Ethereum price prediction post-merge. What does everyone think the price is going to be? So Ethereum's kind of at, what are they at, like 18,500 right now? Do you think it's going to be less than 17,000 right now? 21,000? Everyone's kind of all over the place on this. So this, and then Arthur Hayes, this is the best time to short Ethereum. So, I mean, basically with the merge coming up, that's September 16th, a lot of times these are sell on the news events where there's so much hype going into it that prices keep rising going up to the event, and then everyone thinks prices are just going to explode on the day of the event, but oftentimes there's no price reaction whatsoever, or prices even go down, because there was just so much hype around it that it has the opposite reaction. That's what Arthur Hayes seems to suggest here. He says the best time to short Ethereum is right on the cusp of a merge upgrade. The second largest cryptocurrency will experience a quick and vicious price crash if the much-hyped merge upgrade ends up being a flop. So he's basically just saying, hedge any long bets with a short bet just in case the Ethereum is a flop. Then he's saying prices could go down to 1,000 for Ethereum. I don't see the merge upgrade being a flop. Definitely not. Vitalik is just too organized and too good a CEO for that to happen. He just always makes his deadlines. He never disappoints. So I don't see that happen. So it's just a question of will prices keep going on after the merge, or will they just remain flat? I think it's going to be sort of like a Y2K event where everyone thought craziness was going to happen, and then the clock struck 2000 and nothing happened. That's what I think. I think prices are just literally on the day of the merge going to remain flat. Not going to go up, not going to go down, just going to remain flat. But they'll keep going up until then, I believe, assuming the market at least remains flat. Next article, SEC files complaint against Dragonchain for unregistered ICO. Complaint alleges blockchain starter failed to register more than 16 million in crypto asset securities. So this one's a little surprising just because, so get this, slide this down here. Yeah, having a little bit of trouble sliding that down. So this is a 2017 ICO. That was a long time ago. 5 years ago. CEO John Joseph Rowitz, they are suing for the $16 million that he raised through the ICO then, which they're probably not going to get just because that was, the company's been operating for 5 years since then. So those were business expenses they've already gone through. Plus, it says down here that in between 2019 and 2022, the company Dragonchain raised another $2.5 million to fund business expenses, meaning they must have gone through already the $16 million from years earlier. So at the SEC, they're obviously not going to be able to collect the $16 million. It appears to be more of a strategy, like a negotiation tactic here. This is not the first time they have gone after recently a company from that long ago. This Titanium blockchain, that was another 2017 ICO. Their CEO pled guilty to fraud. This one was a little bit different because he actually used some of the business expenses to fund personal expenses, like he paid off his condo loan in Hawaii, something like that. And then also, I believe some of their money went missing in Titanium blockchain during the ICO. There was some shady activity there. So that was a little bit different than Dragonfly, whereas they're not making any allegations of misappropriation of funds that I know of. They're just saying it was basically a security. They didn't register it as a security, and it is a security. So all the money that they raised in the ICO should come back. Keep people updated on this case as more developments go on. Moving on. Second layoff round at Crypto.com, worse than June cut sources. Multiple sources tell Decrypt magazine that Crypto.com's layoffs this month have been kept quiet, unlike the June layoffs. And these layoffs were much bigger. So in June, they laid off 5% of their workforce, 260 employees. They said they told the current employees that weren't laid off, your job is safe, you're good. They lied, and then on a quarterly all-hands call on Friday, the company informed employees of all additional layoffs. I mean, yeah, it's what happens in volatile markets. Obviously, companies cannot predict the price of Bitcoin. Is the market going to go up or is it going to go down? So it's very hard for them to say, if the market goes up, then we don't need to lay anyone off, but they can't really make guarantees like that. So it's tricky. So I guess it was more than 260 people that got laid off here, and I guess it was more executive layoffs here as opposed to it was more customer service representatives in the last round that got laid off. One thing's for clear, I think it's safe to say in the crypto world that stadium naming rights are going to permanently come to an end. Part of these layoffs are not just due to the market going down, but Crypto.com is the sponsor of the Los Angeles Lakers Staples Center $700 million deal over 20 years, which was criticized at the time, even when the market was peaking. This was November, and BTC was at 65,000 just because it's 20 years. In a fickle market like crypto and exchanges, 1 year one exchange is hot, another year another exchange is hot. You just can't bank on being on top for 20 years like that. So I think going forward, I think crypto companies are going to stay very involved in sports marketing, but I think it's just going to be less long-term deals. So like Algorand, which I mentioned, they kind of did it right. So they're the lead sponsor of the FIFA World Cup in November. So that's a 1-month event, not a 20-year event. And then, so I guess they are attached to FIFA for a couple years here. So World Cup 2022, they'll be the lead supporter blockchain for the North American and European segments, and then also the FIFA Women's World Cup in 2023. They will be an official sponsor, but then that appears to be it right there. So this is like a 1-year deal, 2-year deal, much less risky than a 20-year deal. Moving on, crypto broker Genesis cutting 20% of workforce as CEO Michael Morrow exits. So again, this was, without going into the details of the article, this was clearly just they had overexposure to Three Arrows Capital. They were not diversified enough was the word. And then once Three Arrows Capital went down, Genesis couldn't quite recover. Part of it is also due to the market being down, but it's two big companies today. Big companies, Genesis and Crypto.com, making big layoffs. Last story of the day, Bitboy versus Atozy. Bitboy suing YouTuber Atozy for emotional distress, defamation. Bitboy suffers from depression after Atozy called him a dirtbag who promoted scams, blah, blah, blah. So you get these lawsuits quite a bit here. One YouTuber suing another YouTuber. The interesting part about this one is that they both actually have equal size followings. Bitboy has 1.4 million followers. This other guy, Atozy Mengshol, has 1.2 million subscribers. They both have about an equal number of views. Usually it's the person with a small account or a medium-sized account that's trying to make a name for himself, then they'll go after the top dog. But Atozy, he was the exact same size as the account. They're both huge, so I'm not really sure what Atozy thought he was going to gain from this other than just a lawsuit, so not quite a good strategy on his part. And then Bitboy insinuated in this lawsuit that, in this tweet here, that he has filed a bunch of other lawsuits that were kept quiet that people didn't know about. He tweeted, "I generally like to keep my lawsuits private because I think it's a bad look for crypto. This isn't the first one and won't be the last one. You can't make stuff up about good people and get away with clicks. By the way, I'm undefeated and I don't plan on losing anytime soon." So it definitely appears that he has sued other influencers who have made negative, tweets, videos along those lines about him, and then those lawsuits just haven't been made public, and he appears to be repeatedly winning those lawsuits. So that's that. Yeah, I don't know. I mean, Bitboy's style's kind of grown on me. At first I wasn't quite so sure, but with the generic tweeting of everyone else, they usually, which alts you buy and that kind of stuff. Anyone who kind of tweets sort of more original stuff, I'm a fan of in this day and age. Everyone's entitled to their opinion. It's it for today. Hope everyone enjoyed this episode. We'll be back tomorrow with a new episode. Don't forget to hit the like, subscribe button. Follow me on Twitter at bencryptoshow. See everyone tomorrow. Later.